Today, we're diving into a crucial topic for 2025. What are tax write-offs and tax deductions for small businesses? And why they're a game changer for entrepreneurs, freelancers, contractors, and small business owners looking to save money. Whether you're running a side hustle, a startup, working remotely, or you have a growing business, understanding these tax benefits can boost your bottom line. So let's get started. Number one, what is a tax write-off exactly? A tax write-off, often used interchangeably with a tax deduction, feels like a financial lifeline for small business owners. It's a legitimate business expense that you can subtract from your taxable income, lowering the amount you owe in taxes. Imagine running a small online store. Every dollar spent on inventory, marketing, or a laptop reduces the income the IRS taxes, keeping more money in your pocket. The essence is empowering, rewarding you for the costs of growing your business. Write-offs apply to businesses of all sizes, but they're critical for small businesses from sole proprietors to LLCs, where every saving counts. The IRS, per publication 535, allows deductions for expenses that are quote-unquote ordinary and necessary for your business. Think everyday costs like office supplies or specialized expenses like industry-specific software. The key is that these expenses must be directly tied to the business operations, creating a clear path to financial relief. Now, what are deductions, tax deductions for small businesses, right? Because they're different from write-offs. Tax deductions for small businesses are like a treasure chest of opportunities to cut your tax bill. They're specific categories of expenses the IRS recognizes as deductible, tailored to the realities of entrepreneurship. Common deductions include office supplies, rent for a workspace, employee salaries, marketing costs, and travel expenses for business trips like flights or hotels. For example, a freelance graphic designer can deduct a new tablet, Adobe subscriptions, or a portion of their home internet used for work. Business meals like client dinners are deductible at 50%, while vehicle expenses for work-related travel or gas or things like that, it can add up really fast. Equipment purchases like computers or machinery can be deducted fully in 1 year under Section 179 up to 1.22 million in 2025, or depreciated over time. Healthcare insurance premiums for self-employed individuals are fully deductible as well, if not covered by a spouse's plan, per IRS publication 535. That can be especially interesting if you have health insurance internationally, if you live abroad, and you can take advantage of this as well. Retirement contributions to plans like SEP IRAs or solo 401ks, up to the 2025 limit of $69,000, are another major deduction. The Qualified Business Income Deduction, QBI, extended through 2025 under Section 199A, lets eligible owners deduct up to 20% of their business income, though it phases out for high earners or service-based businesses like law or consulting. These deductions turn your business efforts into tax savings, making every expense work double duty. Now let's move on to some low-hanging fruit for easy savings. Some deductions are like low-hanging fruit, easy to claim, with minimal effort, delivering quick savings. The home office deduction is a standout. If you use part of your income exclusively for business, like a spare room for your startup, you can deduct a portion of rent, utilities, or mortgage interest based on square footage, often saving a couple $1,000 annually. Business meals are another easy win, keeping receipts for client lunches or team dinners deductible at 50%, adding up to hundreds in savings. Mileage tracking for work-related driving, using apps like MyLiQ, is simple and lucrative. Driving 5,000 miles a year at 67 cents per mile saves over $3,000. Internet and phone bills used for business, even partially, are deductible. Office supplies like laptops are no-brainer deductions, iPhones as well. Startup costs like legal fees or market research. These easy to track expenses require minimal documentation, just receipts or bank statements, making them accessible even for busy entrepreneurs. Now let's move on to benefits for small businesses. Tax write-offs and deductions are like a financial shield, protecting your profits from heavy taxation. They lower your taxable income, letting you keep more money for reinvesting. Think upgrading equipment or hiring staff. For example, if your LLC earns 80K and you deduct 20K in expenses like rent and software, you're taxed on 60K, potentially saving something like $7,000 at a 37% tax rate. The QBI deduction could add $12,000 in savings as well. The essence is liberating, giving you room to grow without tax burdens crushing your dreams. Deductions incentivize business growth spending on marketing or a new office, and it feels less painful because it cuts your tax bill. For pass-through entities like LLCs or sole proprietorships, deductions flow to your personal tax return, simplifying filing. Home office, health insurance, retirement reductions. These things make small businesses agile, turning routine costs into strategic savings. Startups with losses can carry forward deductions to offset future profits, offering hope in lean years. Now let's move on to practical tips for maximizing deductions. Maximizing deductions feels like mastering a financial game plan. Keep meticulous records. Every receipt, invoice, or bank statement counts for IRS audits. Use accounting software like QuickBooks to categorize expenses. Streamlining Form 1040 or 1065 filings. Claim home office deductions by measuring your workspace's square footage per IRS Publication 587. Track mileage with apps or logbooks for vehicle deductions. Save restaurant receipts for business meals, ensuring they're work-related. Deduct health insurance premiums and set up a solo 401k for retirement savings. Contributing 20K could save you $7,000, as we talked about. Verify QBI eligibility with a CPA, especially for service businesses. Time your expenses to boost deductions like prepaying rent or software subscriptions before year end. A lot of people prepay their ad spend to reduce their taxable income. But avoid unnecessary spending, as the IRS flags abuse. File quarterly estimated taxes to avoid penalties per IRS guidelines. Here are some drawbacks to consider. Deductions are not a free pass. Bureaucracy can feel complex. The IRS requires detailed records, and errors can trigger audits. 15% of small business returns were flagged in 2024, which is really high. Hiring a CPA costing $500 to $2,000 a year is often needed for complex rules like QBI phase-outs or depreciation. Some deductions are capped at 50%, such as meals, and entertainment expenses aren't deductible since 2018. Over-optimizing, like spending $10K to save $3K, wastes money. Startups with low income may struggle to use deductions fully, though carry forwards help. The process requires discipline. Sloppy records or aggressive claims lead to penalties. So stay organized and consult experts. So who is this for? Write-offs and deductions are ideal for small business owners, freelancers, and entrepreneurs running LLCs, sole proprietorships, or partnerships with 20 to 200K in revenue. They're perfect for retirees with side hustles or nomads with global income, maximizing savings on home office, travel, or equipment costs. Those minimal expenses or complex international income might need extra CPA guidance. What's powerful as a digital nomad is a lot of those travel expenses can become business expense. So here are some steps to leverage write-offs and deductions. Number 1, track all expenses with apps like Expensify for receipts. Categorize costs in accounting software for easy filing. Claim home office, mileage, and meal deductions with minimal effort. Set up a retirement plan for big savings like a SEP IRA. We've had some podcasts on this channel talking about different retirement vehicles. You can confirm QBI eligibility with the CPA. That's another tip here. File quarterly taxes and time year-end expenses for maximum deduction. And test your strategy. Track a month's expenses to estimate savings. Consult a CPA to avoid audit risks. And by the way, if you're looking for a CPA or an LLC, MyLatinLife can help. There's a link in the description. Where you can book a call with us, get all your personal burning questions answered in a one-on-one consultation, and we can help you spin up a US LLC. We can introduce you to CPAs. We can do everything we can to optimize your situation and make progress. So again, link in the description to book a call with us to start or optimize your LLC today. In conclusion, tax write-offs and deductions for small businesses in 2025 are a financial lifeline, turning expenses into savings with a strategic approach. Common deductions, alongside all the low-hanging fruit we talked about in this video, can majorly reduce your taxable income. And for stuff you're going to buy anyway, like laptops or iPhones, it's a no-brainer. Track your expenses, consult experts, and leverage deductions to fuel your business journey. Thanks for watching, and if you found this video helpful, give it a like, subscribe, and hit that bell for more tax and business tips, and we'll see you in the next video.